Hi, welcome back to my portfolio. The stock market was closed today. This video was recorded on Thanksgiving, but there's a lot to talk about specifically with Bitcoin, as we can see a ton of movement on the day itself. On the day, we're down about 1.3%. Over the past week, not great. Over the past month, we can see up 16%, which is tremendous. 3 months up 22.6%. Over the past year now, up 49.56%, and all-time up 48.8%. I did cross that $5,000 mark in gains this week, which is tremendous. And if we zoom over here, we can see that my total portfolio investment is now exactly $10,000. I couldn't be more excited. I think it's a huge step for both my portfolio and this channel. So we'll get right into that. I did deposit another $200 to get to that $10,000 base level. I made a couple of moves. The first was $100 of Bitcoin, or 0.00549. That seems small, but it's because the price has been so high. The price there was 18,202.98. My new position is 0.273 Bitcoin. We'll talk about that later. Next, I purchased one share of O, or Realty Income, at 60.35. That's one of the largest holdings in my portfolio now. I purchased one more share of SPHD, which of course is the largest ETF in my portfolio. That price was 36.41. And last but certainly not least, I purchased my 22nd share of Very, one share there at $7.23. Before we get any further into the video, I'd like to remind you to subscribe to the channel, comment down below what you want to see next, and like the video itself. It'll make a huge difference. This is my $10,000 special, and I'm changing a couple of my graphics. This is what my new background is going to look like compared to this old one. And this is what my new crawler is going to look like compared to the old one. I've updated my music catalog, and I'm making a bunch of huge changes to the channel to try to improve them for you. Let me know what you think, and without further ado, we'll get into the rest of the video. But now we'll talk about why the economy is really a question mark for economists moving forward into 2021. Here we have an article from NBC News titled "Why Economists Are Getting Worried About 2021." They said there's growing concern that an uncontrolled surge in the virus triggered by Thanksgiving weekend could further weaken a slowing economic recovery. They said here, Americans might be gearing up for the holidays, but economists are looking ahead to January, trying to parse a bevy of new data points for clarity about what lies beyond 2020. Basically, we don't know. They described it as murky. They said there's growing trepidation that an uncontrolled surge triggered by Thanksgiving could further weaken a slowing recovery. What we're looking for at the moment is signs of cracks in what's been reasonably good economic growth, said Gary Schlossberg, global strategist at Wells Fargo Investment Institute. They said the economic data is vexing even the experts. Some figures indicate continued, albeit more modest recovery, but others are flashing red. One of the warning signs is weekly jobless claims, which jumped to a higher than expected 778,000, the second weekly increase in a row. So here they go on to talk about what this potentially means. We can see renewed lockdowns can be devastating for workers whose pandemic safety net will vanish in mere weeks. The Pandemic Emergency Unemployment Compensation Program ends the day after Christmas, and the Pandemic Unemployment Assistance Program, which provides unemployment benefits to gig workers and others is typically not covered by state programs, expires December 31st. Really what this means for 2021, we just have to see what a Biden presidency looks like. We don't have any sort of plan for more than a few weeks ahead of time, so there's a big question mark there. They said third quarter GDP grew by 33.1%, matching the estimate released last month. The Commerce Department said there were some good upward revisions to investments and exports, but the gains were offset by downward revisions to state and local government spending, private inventory investment, and personal consumption. Economic output in the third quarter benefited from a bump in durable goods, and manufacturing showed gains. This is good, but here they go on to talk about the fact that GDP was down 31.4%. So really we are down still for the year. That was over the last couple quarters. So that's showing about a 2% bump, but we know that it's down really from a year ago today. But I think that's to be expected with what's going on. It's just a crazy world out there. Here they just talk about the CARES Act and some more of this stuff. But for me as a stock investor and as you, a consumer of this video, the important things to note here are that the economy is really murky right now. We don't know if those gains, especially in GDP, are going to continue or if we're going to see a downward trend again. And really the stock market is outpacing the economy, which is concerning because it means that even if the economy continues to recover, the stock market may plunge just because it's overpriced right now. Let me know what you think down in the comments, and we'll get right into my portfolio. First stock today is VTI, which is my total stock market ETF. So this is going to track the market as a whole, and it does so very well. Total return is now up $170 here, or about 17.6%. We zoom out to the month, we can see up about 7%, which is awesome. 3 months now up about 7.5%. Over the year up 17%, which is crazy considering where we were at here in March. I wish I would have purchased more down there. And over the past 5 years now up 75%. It is important to note that there is a dividend here of about 1.5% being the dividend yield. So that means that this really is higher than about 75% over the past 5 years. I think if you're looking at getting into investing, something like VTI or really any of these broad ETFs could be a good strategy for you because they're going to encapsulate the entire market. Second one for today is a REIT, Realty Income. I mentioned earlier that I purchased one more share this past week. Total is now 14 shares, or about 6% of the portfolio. Total returns up about $61 or 7.4%. This one has an extremely high dividend and it pays monthly. I've gone over that in quite a few videos. The dividend yield is at 4.5%, which is awesome. So on the day, up 1.7, but when we zoom out, we can see still not doing great. So up 5.5 on the month. 3 months now pretty much flat at 1%, and on the past year still down about 18%. The way I see it, real estate's going to be slow to recover because renters are having a hard time making the rent, and certainly people with mortgages are struggling to pay those mortgages. Now could be a good time to buy, even if the stock market does struggle, even if it does dip in the next year. This is my long-term portfolio and I am very excited about what that holds. So over the past 5 years, it is still up about 26%, which isn't great, but when you factor in that 4.5% dividend yield, that's about a 30% return over 5 years if you reinvest those dividends, plus that 26% in just the price gain. So I think this is a very solid performer. The next stock is Coca-Cola. I'm looking at purchasing more shares of this. Of course, dividend king, and that means that Q1 of next year, the dividend is going to increase. It's currently at 41 cents a share, and there's no reason to believe that the increase in dividends will be huge. But of course, they have increased at 58 years in a row, so I would project about 42 cents per share. It sounds small, but it's about a 2.5% increase, and that's all it takes to really make a lot of money over time. So up 22%. Or rather $22 on Coca-Cola all-time, or about 3.3% now, trading at $53. Over the past month, up 6%. 3 months, up 11%. Over the past year, down 0.5%, and 5 years, still up 24%. We know that Coca-Cola was hit extremely hard during this first round of lockdowns. The combination of things like movie theaters and amusement parks being closed, as well as restaurants really struggling. We know that Coca-Cola had a very hard time with that, so it could be a decent time to buy depending on what happens. But as I mentioned before, this is my long-term portfolio. I'm looking at it long-term, and they have solid earnings, a great track record, and a dividend that we know is going to increase. The smaller of my two REITs is VEREIT. This one is trading for $7.40 a share. They did cut their dividend earlier this year because of financial struggles, but I think this could be a solid performer. The dividend is still very high at about 5.84% with that price drop, and we can go over here to about 3 months or over the past year. So 3 months up 9% still. Over the past year, down about 24%. So when they dropped from $12 down to about $4, that dividend yield was like 18%, which of course is completely unsustainable, so they were forced to cut it. But this dividend pays quarterly, and it's now at 7.7 cents per share. If we annualize that, as I mentioned before, about 5.8%. So I'm very happy with this one. I did purchase that one more share, and I think it's so cheap, still under $8, that I'm looking at purchasing more shares. But if we zoom out to 5 years, we can see still down about 11%. Let me know what you think about this one. Last stock for today is going to be Apple. I'm down about $4.83 on this, or 4% all time, but I've only owned this share for a couple of weeks, so I'm not super concerned at all. 58% buy rating still. I think it could be a bit higher potentially than the price should be, but long term, not worried about that. So over the past month, up about 0.5%, 3 months down 8%, over the past year up 74%, and 5 years 290% growth. It's also important to note here that after that stock split that they had earlier in the year, the iPhone 12 line was launched. It's still too early to know exactly what's going to happen with that, both because of consumer demand struggling. People don't have the extra cash to pay $1,000 for a phone, as well as the fact that these phones often take 6 months to a year to really see how a company's doing. But let me know what you think about Apple. Of course, last but certainly not least, we have to talk about Bitcoin. The price is down a considerable amount today, but I think that's good. We did see a price correction over the past week. We can see it peaked here at $19,400. The actual peak was right there at about $19,600, which was almost an all-time high. A lot of experts predicted a rejection at that all-time high. Of course, I'm in this for the long term, meaning the next year, so I'm not super concerned about that. I think a price correction here is actually good. It means that the price should be a little bit lower when I continue to buy. My quantity is now up to 0.2737 Bitcoin. Average cost is now back over $10,000 at $10,102, and my equity is $4,746. Total return is up nearly $2,000 or 71%, which is insane. If we zoom out 3 months, we can see it's up 50%. Over the past year, up 141%, and 5 years now, up 5,285%. Crazy, crazy, crazy. Let me know if you think I should buy Bitcoin, sell Bitcoin, if I should talk about it more or less. I just find it extremely interesting, and of course, I'm invested in it, so it's something that I want to talk about. Thanks for watching to the end of the video, and I'll be back with another one next week.